Awesome show for you guys. Awesome show for you. You better believe it, baby. Bringing you the hottest news. Starting very, very soon. If you're watching this at a later time, just go ahead and fast forward this. This is just the startup screen. We will be live very, very soon. Little mic check never hurt no one. About 3 minutes, guys. 3 minutes. We'll be starting here in about 2 minutes. 2 minutes, ladies and gentlemen, while you're waiting. Vote on the poll. The question is, do you think America is headed towards a recession? Give me your honest opinion. I'm curious. So far, 33% say yes, we're in trouble. 43% say soft landing is imminent. 14% say I don't know, which is A-okay. If you don't know, that's okay. All right, 1 minute left, baby. Less than. Predator's here. Predator's here. It's a party. It's 9 o'clock. Let's do this, baby. Good morning, good afternoon, wherever the hell you are at, wherever you're listening from. Welcome to the Bear Bull Brief. My name's Dave. I'll be your host today. Thank you so much for joining me. It is lovely to be here. We have an awesome show to go over. We got Chinese hackers. We got the China hackers out there trying to take over our bank firms. We also have the analysis thoughts on the Q2 NVIDIA. It's all said and done. What's the outlook now? What is to come? Then, of course, we're going to go over the S&P 500 and what is happening there. We also have why Americans are so damn pessimistic. I always say it pays to be positive, but you know I'm a bear with bull horns. I want to know both sides of the story, so we'll go over that. And two, if we have time for it, we're going to get down deep right into what's going on with all of these recession fears. Also, I used ChatGPT today. We want to know exactly what a recession is because I don't think a lot of people understand what it is. There's a few very key factors, and once we understand those, I think we'll see kind of where we are at. First and foremost, I want to say, what is going on? Predator is here. Not only here, but he is on time. Erica's in the building, and of course, Jimmy Bright. What's going on, Jimmy? It's good to see you. You're always here, brother. I swear, you're just waiting. You're just waiting. You got a cot in the back. You're ready to rock. We got 11 votes on the poll. The question is, do you think America is headed towards a recession? It's a very serious question, and I hope you put some thought because we are 50-50 right now. Technically 36-36. But with 11 votes already on this poll as we just start. 36% say yes, we are in trouble. 36% say no, a soft landing is imminent. 18% say they don't know, and 9% of you said just give me that hot, stinky news. The news is coming up, folks, so please, while you are here, vote on that poll, and if you haven't already, hit that like and subscribe button. We appreciate you. All right, first and foremost, we're going to do it. We're going to bring it up. We are going to talk about those. Where are we? There it is. There it is. The Chinese hackers. We're going to talk about it. We got to talk about it because these Chinese hackers are absolutely cray-cray. Volt Typhoon is the name of these hackers. But just before we get started, I want to say right now it's currently 9:02 on August 28th, 2024. Okay, the S&P 500 is currently closed at 558.35. We are still above a 10-day moving average. I always like to start with that so we know exactly where we are at in the history. If we ever go back and look at these things, we can use this as kind of a history marker so we understand what exactly is going on. And if he joins, I'm going to sing a special happy birthday to my Uncle Harold, one of my favorite family members ever. If he pops in here and he says that he is here, if he says hi, I am going to put it all on the line for you and give you a little me, and I will sing to him, okay? That is that. I've already said it. It's said and done, folks. So if he pops in here and he says, hello, mate, then I'm going to sing, but not in a British accent. So first and foremost, here we are. B. Stewie, what's going on? Yosef's in the building as well, and Jolene Martina. Volt Typhoon is the Chinese hackers, the group that is in China. We want to understand this because if you guys remember, before the Fed chair, Papa Powell, said he was more worried about the balance of the labor market with bringing down the overall inflation. He said his biggest fears was a cyber attack on our banking system. And this right here is showing how we're getting picked apart. This is exactly the reason why I want to find a great cyber security ETF that I can start investing in. Because with AI and everything that's going on, I've been saying it for years now, with AI and everything that's popping up and everything that's coming in, cybersecurity is going to be number one, okay? Volt Typhoon has breached 4 U.S. firms, including internet service providers and another in India through a vulnerability in a Versa Networks service product. According to Lumen Technology Incorporated unit Black Lotus Labs, their assessment, much of what was published in a blog post on Tuesday found that moderate confidence that Volt Typhoon was behind the breaches of an unpatched Versa systems and said to exploitation was likely going on. So they managed network configurations and it attracted investments from BlackRock. Oh my gosh, we can't start like this. BlackRock and other banks announced the bug last week and offered a patch of other mitigations. The revelation will add concerns over the susceptibility of U.S. critical infrastructure to cyber attacks. The U.S. this year accused Volt Typhoon of infiltrating a network that operates critical U.S. services, including some of the country's water facilities, power grid, and communication sectors, in order to cause disruption during a future crisis, such as an invasion of Taiwan. Sticky. A spokesman for the Chinese embassies in Washington said in an email, Volt Typhoon is actually a ransomware cybercriminal group who calls itself Dark Power and is not sponsored by any state or region. He added that China sees signs that the U.S. intellect community has recently collaborated with cybersecurity companies to falsely accuse China of supporting cyber attacks against U.S. and part of its effort to boost congressional budgets on government contracts. Bloomberg couldn't identify or verify these claims. And you know, a lot of what we read, guys, is going to be ramped up because of the media. But this right here is one of many, many, many stories that is to come on cyber attacks on U.S. soils. I mean, it's very obvious, guys, when we have this trend in AI and all these, you know, I use ChatGPT every day now. If I want to get my information or if I want to create code, it makes everybody a hacker in a sense, right? If you plan your wording right, you can slowly work intellectually into different sections. If you don't protect yourself with some type of cybersecurity, you have the possibility of being breached. So no matter how serious this specific post is, think of Russia's attacks or China's future attacks or any type of attack isn't going to be so much military attacks now. It's all going to be on the phones that we hold in our hand, on our financial systems. We all need money, and if you don't think you need money, try and live without it. You know what I mean? So this is one of many, many things I do believe to come. So this is all kind of hearsay, but I do like reading about these because that bit of fear will show you how much and how serious cybersecurity can be, how it needs to be on our number one watch, especially coming from Papa Powell. I thought that was crazy. About 2 months ago in one of his speeches, he was saying that is his biggest fear. If that's the Fed's biggest fear, that's one of my biggest fears too. What's going on? Norman Conklin's in the building. Granny Ranny, Grandma, she's in here. What's going on? Nice one, Michael. And hi, Beast. Oh, B Stewie. Grandma says hi, B Stewie. Grandma's in the building. What's up, Johnny Rodriguez? What's going on? Michael Anthony says the reason the sell-off from highs is because next Tuesday we'll start seeing major sell-off of being September, which is worst month that markets will drop. Well, also, you got to keep in mind in September 18th is when we are supposed to cut rates. We are supposed to cut rates as well. And sure, you know, it is cyclical, right? With the weather, you know, as the heat, you know, blah, 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 blah. We have a cyclical situation here where in these times, usually the market does pull back a bit, right? Because of the fear, because of the uncertainty, because of all the issues that's going on politically, a lot of people are uncertain and they start pulling their money. We also just came off of all-time highs, but do keep in mind, guys, we are still above a 10-day moving average. We're just a kiss away from all-time highs. So I don't see it being that bad personally. Right here is on September 18th is the target rate of 66% chance to have a quarter of a rate cut. We also have a 34% chance of cutting a half of a point. So that is very, very interesting. And if you don't know what's going to happen, that will also create some uncertainty as well. It's good to see you in here, Michael. He also says that will be on September 18th, and until that date marks are all overbought. B Stewie says, hello, Granny Ranny. She's getting some love, baby. And if you guys haven't already, hit that like and subscribe. We do all of this for you for free. And of course, if you want this amazing charting platform, all you have to do is go to my link tree in the more section down below. Click the link tree, click on the trading view button there. This is honestly the only way I get paid. If you click on that link and you download the essential plan, I get a little small portion of that. But if you don't want to, and you just want this and you want to use it for free, you can do that too. It's absolutely free. But if you are serious about investing or charting and chart analysis, this is what you need to do. All right, next up, ladies and gentlemen, we have the S&P 500 losing its rally. Now, Michael just brought up a good point about, you know, the overall intentions of the market around these times usually start to sell off. The rally in the S&P 500 lost traction as the NVIDIA Corporation extended its sell-off more than 6%. The good news, most stocks in the U.S. advanced. That is the key word there. Most stocks in the U.S. advanced. And we can see that in, I could just switch this over here. Let me go to the Mag 7 and the ETF sector, and we look at this. You can see here we are still above over half of the stocks, or the majority of stocks, the percentage of stocks that are above the 50-day moving average. 64% of stocks are above their 50-day moving average. So we are still in very good territory. No fear in the market currently. So the good news, most stocks in the U.S. advanced, okay? Data showing the economy is holding up, and a host of market observers reassuring investors that NVIDIA's growth prospects remain intact. If you guys were with me when I streamed this, you didn't hear one bad thing about it. It just didn't overkill everything, right? When everybody is having these financial outlooks on these Mag 7 stocks, they are expecting with this AI, they're betting on the very longevity or the huge future. They're looking far, far out. And that's what the market likes to do. It likes to see its future. It plays this role in very months, sometimes years ahead of the time, depending on how inflated some things might be. And you can see it here. So anyway, investors that NVIDIA's growth prospect remain intact. The vast majority of groups in the American equity benchmark rose. While tech was dragged down by that giant chip maker, 5 companies in the Magnificent Seven group of mega caps gained. The Russell 2000 of small firms climbed almost 1% in the late hours. Dell Technology jumped after its results. As long as the tech sector can avoid getting hit hard, it could/should keep the rotation scenario in play, said Matt Maley at Miller Tabco. Since the big cap tech names are so highly weighted in the indices, and significant decline for the group will cause the market to move lower. But as long as they can hold up, it can allow for the recent rotation move to continue and help the stock market move higher over the coming weeks. So I believe in that. I think there's still rotation here. They go on to talking about, the Treasuries holding after 44 billion sale after 7-year notes was a bit soft. The 10-year bond advance 3 basis points to 3.86. Swap traders slightly trim bets on Fed easing. So we have all these things that are still showing bullish. Now, I know there's a lot of bears out there. I know, and I always have to argue with the bears, always. Here's the thing. I'm a bear with bull horns, guys. I'm a bear with, right here it is, Mama. I don't know if Mama's in here yet, but she made this shirt for me. God, I love you, Mama. Thank you. But Sandra's in the building too. What's going on, Sandra? But yeah, guys, the biggest thing about all of this is I always say it pays to be positive. I am a bear with bull horns. I'm always looking for both sides of the story. So if we have a bear biasy, which I feel like there is plenty out there, there's fears of recession, there's fears of sell the news event, there's fears of recession, the job labor market is starting to fail. We have all these fears out there, but I'm still going to be positive. When do I start to look a little down? Well, look at the S&P 500. If you guys have been with me at any amount of time, you'll know my fear starts to loom when we break below a 21-day moving average. If you guys were with me here, I was out of the market. I was hands off, and sure enough, we dumped, and we dumped even harder, okay? I'm not saying I called this. I had no idea there was going to be a Japanese carry trade where we were going to have to unwind in the Mag 7 and then reapply into the Mag 7. I had no idea that was going to happen. All I knew is that my rule basis, just from history, just from my personal examination of the overall market, if we're above a 21-day moving average, I want to be a part of it. I want to be in those stocks that are rising with the market. And if we're below it, I want to be out of the market, and I want to sit back on my hands, relax, and not be a part of it. And it's that simple. So with everything that's out there looming, with you can have all this hearsay, the ifs, ands, do's, or don'ts. If I see my strategy, which is a trend or a base breakout setup on the daily or hourly time frame, I take those trades. That's just the way I play. I'm not saying it's right for you. I'm not saying it's right for anybody, but it's right for me because that's what keeps me sane and comfortable. Okay, that's the only thing that will help me ease my way into the overall market, right? And if we don't have those rules and that proper placement or your proper process, I should say, your proper process in the overall market, it will drive you crazy. You will be one of those guys who spent 5 years in the market and then quits because he just can't figure it out. Well, as long as I stay disciplined and I stay to my rules, I found I make money. And you can too, of course, right there. Dan, Dan, the greatest moderator alive, has joined us tonight. He added the link tree in the comment section down below. So if you are interested in joining our Discord, there's only 2 requirements. That is a heart of gold and an open mind. We have a beautiful squad, fam squad. Go ahead and join us up, guys. We hung out this morning for like 4 hours straight. It was Predator, Beef Stewie, Dan, Bob, Jolene swung in there. I think we had Nalani was in there for a little bit. I mean, we just hung out, guys. And that's what I like to do. I like to create this community so we all have questions. We all want to talk. We all want to say this, that, the other thing. So join the Rumpus Room. I don't even know what the Rumpus Room is. And that's twice we've referred to it. Oh, I know. I should know. But anyway, since you guys know my stand and my positivity and all that good stuff, you guys have to know why the Americans are growing more pessimistic about the job market. okay? Job market, if you guys have been following me for any amount of time, I follow that data on the job market, especially because Fed Chair Powell says that is what fear is looming in him. That's what keeps him up at night. Aside from the cybersecurity now, he wants to keep that balance between the inflation, which right here's your inflation curve. Our latest report shows that we are down to 2.9%. And he has also stated, if you watched my, they want to change. They want to change. They're ready. They're ready to ease inflation. And so what he is saying is lining up with what the analysts are saying on this CME Fed tool, where we're going to cut rates 0.25% at 66%, that we're going to cut in September 18th to be specific. Okay, so with that being said, I want to know why Americans are growing so weary. So right here it says Americans are growing weary of the job market amid continued signs of labor demand is cooling. And we know this. We've seen this. We've seen that more people are without jobs because more people are filing for unemployment, right? According to the data released by the Conference Board on Tuesday, overall, the latest consumer confidence index reading from the Conference Board shows an uptick in confidence this month. That's a good sign. From 103.3 to 101.9 in July. Through Conference Board Chief Economic Dana Peterson noted consumers' feeling were mixed as labor market worries increased. Okay, compared to July, consumers were more positive about business conditions, both current and future, but also more concerned about the labor market. Peterson said in a release, consumer assessment of the current labor situation, while still positive, continued to weaken, and assessments of the labor market going forward were more pessimistic. These likely reflect the recent increase in unemployment. Consumers were also a bit less positive about future income. The report also found consumers grew more weary of the stock market after the early August sell-off, with less than half of consumers expecting stock prices to rise in the next year. Inflation expectations, however, were more positive, with year-ahead expectations for price increases falling to the lowest level since March of 2020. Confidence was also divided along demographic lines, with confidence in August falling for those under 35 and rising for those over 35 and older. The Confidence Board found 32.8% of consumers said jobs were plentiful, down from 33.4% in July. Meanwhile, 16.4% of consumers said jobs were hard to get, slightly up from 16.3%. The report comes as a recent economic data has shown softening in the labor market. We are very aware of this softening. So let's see here. Quits hit lowest levels since November 2020. If you guys remember, it was like the great quit era. Everybody was quitting their job. It was like after we had COVID and everybody goes back to work, everybody's like, you know what? This work stuff is for the birds. This is absolute BS. And, I tell you, I was one of them. I didn't so much quit. I just looked for a better place of employment. And I'm glad I did, because I'm telling you guys, my back is through. It is through right now. And doing that manual labor day in, day out for 15 years straight really put a strain on me. Now, I'm glad I can say I have something to show for it, right? But after 2020, after the COVID, and I think there's some people out there that are with me, but after COVID, guys, I said, I'm going to sit back and I'm going to find a better way to make money. And I did. Sometimes it's a little bit more of a struggle than having, a constant steady income, a constant steady stream. It's harder, mentally, instead of just going to work and breaking my back physically. But you know what? It's working. So we're going to keep on keeping on. Keep on keeping on. We got a lot to catch up on the chat. So we are going to do that before we go into our next area. We have a couple more things we want to go on about. So let's catch up on the chat. Michael says Dell might work since there's earnings and strong beat since dividends are better. Let's take a look at Dell. Let's see what Dell's looking like. So Dell, the only issue I have with Dell, now it did just get up above. Now look at this. I think the last time you brought up Dell, this is what I shown. Oh, this is beautiful because look, after it came up here, I drew this line saying if this was a lower low and this created a new lower high. Now guys, this is hilarious. Like, look at this. And now it's came up, it's right here. Maybe this finds its line of support here and it creates this new lower high that I just randomly drew 2 weeks ago. and maybe we get another new lower high. This might actually work out. So it's good to see that Dell is above a 200-day moving average. It's also above a rising 200-day moving average. And with the the earnings beat, we had a 10% surprise on Dell and a 3.68% surprise on its revenue. So that's really good to see. So yeah, I do like the look of Dell. I still think it needs more time. I like to see 3 new lower highs, and I would love to see for this moving average to come down or for this to catch up to its moving average. So thank you for that, Michael. I appreciate that. He also says, I went to all cash. Yep, I think a lot of people went to all cash. And I promise you, if we break through on the S&P 500 below that 21-day moving average, I'm all cash too. Currently, I don't have any swing trading stocks, but I do hold about 20% in small caps in my long-term account through my financial advisor, and the rest are in bonds and stocks through the S&P, okay? Or they at least follow the same criteria of the S&P 500. So I agree with you in the all cash if that's how you feel, but I need a little bit more proof that we are going to head lower. If we break the 21-day moving average, I'm with you, Michael. I promise you, I'm with you. Those are my rules, and I'm going to stick to them. What else do we got here? Marvel, we can look at that a little later. He says, I'm not a bear, but I know better chasing when CNBC is still talking about a recession. Hey, man, they keep talking about it. You know how that goes. They might bring it into fruition. Jolene says romper room. Oh, what did I say, rompus? Predator says, through a nearly 25-year period, the U.S. economy has expanded in all but 2 years, 2010 housing bubble and the 2020 outro of COVID. Jill says, SMCI may keep dumping. We could take a look at SMCI before we continue here. So SMCI is clearly well below all of its moving averages. And if you guys see right here, I drew this, and I actually made some money off of SMCI when it broke this area. The most money I made was on a day trade, and I made it on this day right here. And I only took about half the candle, but I mean, I put in full account on this. I made, between $1,000 and $2,000, something like that. But, we always could say, well, could you imagine holding on? Well, 2020, you got 2020 vision in hindsight here. But we drew this path out. And if it's not a long, when it breaks these trends, then they are shorts. And I've been actually bringing in a lot of data for that. So yeah, it very well could. I promise you that. If it doesn't have any moving averages, the question is here, because after a huge pullback like this, the real question is where are you going to short? If you think it's going to continue lower, at what point is your cutoff? It is at a lower, it is much, much lower, and sure, it could head higher from here, but I wouldn't want to take it when it's at its low, right? I would want to wait for a pop and then try to take the drop, but this is out of my criteria here. This right here, this what I would consider for a short. If we did something like this. Now, of course, this is my thoughts, not yours, folks. But right here, and then you make a base right here, and then we say, okay, well, it breaks this base, and again, I'm looking at this in hindsight, but sure, it could work out. I do like that. Let's see, bloop, 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 bloop. So yeah, SMA might keep dumping for sure. Predator says, please remember all media now is not news only. Yeah, they are also operating with the entertainment factor. Absolutely, absolutely, guys. And, even this, I'm loud, I'm bubbly, but I always like to keep everybody's focus the fact. That's why I always bring up the S&P 500. If they're bringing up recession fears, if they're bringing up whatever they're bringing up, and we look at the overall market, we are so close to all-time highs once again. We're literally $10, less than $10 from today's closing from all-time highs. It's hard to be negative, right? Now, when we were here, it was a different story for me. When we broke the 21-day moving average, this was all a different story. I was very cautious. I was very careful. I was watching this 50-day moving average to act as support. We started to get choppy. We weren't finding any setups here, and we sold off very hard and very fast. So yes, I agree with you, Predator. They like to do that. B. Stewie comes in. He says, smash that like button. Thank you so much, Stewie. And before we carry on to our next piece of news, I want you guys to take a quick look at my screen. We got 20 of you watching right now. I appreciate each and every one of you, but you got to do me a favor. We only got 16 likes and 20 watching. Wake up, people. Wake up. We are here, and we are kicking ass. This is the greatest show out there right now. I do it all for free. All I ask, smash that like, smash that subscribe button if you haven't already. I don't know what VH you're waiting for. Grandma's in the building, so I ain't cussing today. That is that, okay? And if my Uncle Harold pops in here, I already promised you, I'm going to sing him a beautiful happy birthday. So I hope you got your listening ears on because my voice is like an angel. All right? Next up, ladies and gentlemen, we have, as we were just talking, recession forecast may have been wrong for years. And here's why: a perfect indicator does not exist. So before we actually go into this, I want to just talk to you a little bit about what exactly a recession is. Now, I brought this up on ChatGPT, and I thought it would be important. There's a whole slew of things in here. I just want to read you the official determination and the summary on this so you guys have an understanding exactly what a recession is, and I think you'll be a little surprised. In the United States, the National Bureau of Economic Research, or NBER, right? NBER, NBER, is the official body that declares recessions, okay? So it's only a recession if NBER considers it a recession, first and foremost, okay? It is a varied of economic indicators, including gross domestic price, okay? Employment, income, retail sales, and industrial production to determine whether a recession is occurring. They may declare a recession even if it doesn't meet the 2 consecutive quarters of the GDP rule. So the main rule is like, if we have 2 consecutive quarters of declining GDP, that is considered a recession, right? That's like what everybody goes by. But technically, it's not. It's technically only a recession until these guys say it's a recession, okay? That's when we are going to consider a recession, because that's when the media has to say it's a recession. That's when the government will tell you when it's a recession. So what is a recession? A recession is when somebody else tells you it's a recession. I just want you guys to know that. So personally, I like using the GDP. That shows you that there's a decline in growth domestic price, meaning we are not growing and we are actually slowing. And if we slow for too long, that can show a recession, okay? So I like to focus on GDP, but the official determination is when somebody else tells you that it's a recession. So the summary: recession, a period of significant decline in economic activity across the economy lasting more than a few months, typically recognized by a negative GDP, or growth domestic price, GDP growth, rising unemployment, and other broad economic indicators. NBER, the official body that declares a recession in the US, considering a wide range of economic data. Now, I'm not saying that I agree that somebody else is telling us when it's a recession. I'm just giving you the official determination. You can call it a recession, your mama can call it a recession, but until the National Bureau of Economic Research tells you it's a recession, then it is not a recession. I personally like to use the GDP. If the GDP comes in 2 consecutive showings that are lower, then we are in a recession in my book. Just like when it comes to being in cash, in my book, it's when we're below a 21-day moving average. Now, let's move on. Does everybody agree with that? Erica, you're watching on 2 devices? That makes me happy. That's twice the amount of watch time I get for this channel, and that is what we're working on, folks. We busted through that 1,000 subscribers. Now we're just trying to get that watch time hours, and I know that we can do it. Erica, thank you so much for your dedication to this channel. You are awesome. Much love. So, it hasn't been a great time for folks in the business of predicting recessions. The Conference Board Leading Economic Index signals a recession in 2022. The highly regarded introverted yield curve recession indicator has been active since November of 2022. Even the commonly accepted layperson's definition of a recession, 2 negative quarters of GDP occurred in 2022. Most recent rule, which measured short-term rises in unemployment, triggered its recession flag in early August. But as many economists will tell you, the U.S. isn't and hasn't been in a recession. The creators of all these measures say the time may be different. These indicators could be and have been showing false positives, and the notable distortions to economic data from global pandemic have unquestionably made the prediction business harder. But the latest failures also reveal a harsh truth about the recession prediction game. Recession indicators aren't perfect, and they likely never will be. Just ask one of the most prominent recession indicator creators. The economic is so complex that it's unlikely we get the perfect indicator. Duke University professor, Duke University. Watch out now. He's a lot smarter than me. Put my head on backwards for the Duke University. Yeehaw. Duke University professor and Canadian economist Campbell Harvey, who invented the inverted yield curve indicator, told Yahoo Finance. Much smarter than me. And look at it. Here's Michael Burry down here staring at me while I'm trying to read. Ease up, Michael. The National Bureau of Economic Research says a recession involves a significant decline in economic activity that is the spread across the economy and lasts more than a few months. The problem for investors and the like is that the NBER, which we just read about, which is the official arbiter of the recession, does not declare a recession until, well, after the fact. For example, the NBER did not declare the recession, pandemic-related recession in March 2020, an official recession until July of 2021. Okay, that may be why there's a rabid interest in projecting when the next recession will come. The benefits of such a call vary. It can help or hurt political parties in an election year. It also can provide a rationale for why consumers and the news media have struggled to explain the vibe session over the past several years. I almost want to click on vibe session. That's a new one for me. So guys, when it comes to a recession, NBER, they're going to let you know when it's too late. You can't wait for NBER to tell you. It's already going to be down. They're going to go, yep, that's a recession. When things are on fire and people have running around with their pants on fire, then they're going to go, NBER comes out and they go, they like wipe the dust off their shoulder. They're like, yeah, that's a recession. That right there, that's a recession. And everybody's like, these guys, they're amazing. They're not here to save you. They're here to just tell you what has already happened, okay? They're reading out of the history book is what they are. So this whole situation here will go to tell you that these indicators don't work, right? That's why personally, okay, guys, that's why personally, I'm not telling you what I do is just clear and dry, right? I mean, it is, actually. I'm just going to own up to it. It is clear and dry. That's why I use the 21-day moving average, right? Look at this. Hard to argue that we're not in a bull market when we're above a 21-day moving average. When we break low, that's when I have a bit of fear. That's when I'm hands off and I don't have any cash in the market until we start to show new lower highs and have a follow-through day, right? That's simple. And sure enough, I saved a lot of money here. Technically, I saved about $25,000 right here, if you want to be exact. About $25,000 could have been lost here if I didn't give my financial advisor a ring and said, hey, pull me out. Then guess what? Called him again on this day and skipped out on all of this BS right here. I don't need to be a part of that. I need to be a part of this. So that's why I say my way is cut and dry. I'm not saying it's the best way. I'm not saying it's the right way for you, but that is why I like this simple indicator of a moving average, the 21-day moving average. You're in or you're out. You're risk on or you're risk off. Is a recession going to happen? Well, I promise you, if we continue to decline and we start to see significant failure in the overall market, and we'll see fear already in the market because it is a future projection of what is to come, we're going to see it here in the market first. When we break that 21-day moving average, well, I'll find out later. I'll wait for NBER because guess what? I was already out of the market long ago. Okay, let's catch up on chat here. Let's see. Yeah, Bob Dan posted that link tree. I'm just going to show you guys how to do this, okay? Take a little peeky gander at my screen if you would be so kind. Click this more button down here, guys. If you scroll down, you'll see this link tree. Click on the link tree. We have an awesome YouTube channel. If you click that YouTube, you're going to scroll down. You're going to see right here's the hot news now. That's what you're watching right meow. And then, of course, we have your how-to platforms in your trading school. How to set up your trading view right here. How to play base breakouts, trend breakouts, EP strategies, risk management. You get the idea. We got everything here for you folks, okay? And it's all absolutely free. Well over 400 videos. Yes, that is my promotion for me and the squad, fam squad. Oh yeah. Discord, Heart of Gold, open mind, join the Discord. It's absolutely free. Can you believe it? $0. Here's the trading view. Click it, stick it, see you later, bye. And of course, we have Instagram, TikTok, Facebook, and Twitter, but we'll call it X. All right, and while you're here, smash that like, smash that subscribe button, and we will get right back to the show. 20 watching and 18 likes. Come on, we can even this out. Give me 2 more, baby. And of course, we have a poll. The question, which really relates right now, the poll, the question is, do you think America is headed towards a recession? Okay, I'm not asking you if we are in a recession. I'm asking if we are headed towards recession. 40% think yes, we are, and 25% say no, a soft landing is imminent. So it's showing right now that the majority of us here are thinking that we are in some trouble, and that's a-okay. You are entitled to that opinion, and I can see where you're coming from. There is a lot of fear out there, especially with the job labor market starting to head lower. 25% say soft landing, 30% justifiably say they don't know, because I promise you, I don't know either. Okay, that's where I voted. I personally have no idea, and I personally do not care. I don't care in this situation. That's why I like the 21-day moving average. Guess what? I don't have to worry about jack diddly squat. 5% of you say, give me the hot news. So I'm going to give you a little bit of this analysis on NVIDIA, because NVIDIA is the hottest thing out right now, and I really want to see what somebody else thinks, because I have my thoughts, and I mean, I can give you my thoughts just really quick, but then we're going to read what this analyst says. Here's NVDA. We are at a very big area of support right here. 117. If it breaks 117, I say we are going to head lower. If we hold 117, the 117 area, keep in mind it is an area. If it holds that area, then yes, I think we are to bounce and head higher. I did take a bid after the earnings when in the pre-market, and it bounced. We were up a couple $100. I did not take profits. It was very small share size, only 25 shares, but it bounced a whole $10 off that level. Okay, we seen the support. We bought into the support. We held on to the support in hopes, we were smoking that hopium, that it would go higher. We got in at a low price. We held on to it. It's back down there. I'm out until I see new lower highs, and we can see that that bounce is coming into fruition, and I will continue to load back up. But for the time being, I stopped for break even today on NVIDIA. I want to wait and see what it does down here. Let's take a peeky gander at the price action and how the volume adds up in this area. So those are my simple thoughts on the technical analysis. I'd like you to know, or I would like for you guys to tell me what you think about NVIDIA in the chat. And let's catch up on the chat. 5 of 7 Mag 7 are green, up as of close. All but one of the major market NASDAQs are up, also off close. Predator says, Predator, I'm telling you, you're going to join this show one of these days. Okay, I know you don't want to be on this show, but I'm going to get you on here. We're both long-winded, though, so we're going to have to arm wrestle who gets to talk first. Predator also says all but 5 market sectors are up, and the 5 down are only down less than $2. Very good point there. I like that you're going over the overall sectors to find that out. Also, B. Stewie says, when do the t-shirts go on sale? I'll take 3X. Hey, dude, this my mom made me, dude. I absolutely love it. I would love to get one with just this big bear with bullhorn, or like that stock market brief picture that we have up. I would love that on a shirt. I think those would sell pretty well, right? But of course, B. Stewie, you're getting that shirt for free, baby. You're the OG. You're my number one. You're my twinkle in my eye. Michael Anthony says, I think NVIDIA could fall to 110. Michael Anthony also says August 5th did announce some flaws in the new chip, which may be the rally in the fourth quarter or 3 months away, which on that news hit nearly $90. Yeah, brother, I agree. It definitely can come down. We're below a lot of the moving averages on NVIDIA. As you guys can see here, we're below the 50-day moving average, which I do not like personally. And I think with all of this push, it's got a lot of ingesting to do. This is really choppy right here. It's very choppy. It's not showing strength right here, okay? This bounce could just be a rubber band snap back up to the north side. So we'll see if NVIDIA wants to keep continuing to cultivate price action and show that it's a leader. If it's not a leader, it's going to start falling. And 110, I would say, is a pretty good price target. We have this marked out as this rounded cup with handle at $96. I think, yeah, we could definitely head all the way back down there. Michael, it's not often our thoughts kind of line up, so I'm glad they are today, brother. It's good to have you in here. The analysis. So let's see what these guys have to say. NVIDIA shares slipped lower early Thursday trading, but paired the worst of their post-earning declines as a host of Wall Street analysts rushed to update ratings and price targets on the AI chipmaker following its highly anticipated July quarterly update. NVIDIA, or NVDA, which holds a commanding lead in the production of chips and processors that power AI systems around the world, posted record revenues of $30.04 billion for its fiscal second quarter and saw profits more than doubled from the same period last year to 68 cents per share. The group also suggested that the current quarter revenues would continue to improve, at a slower pace, and forecast a top-line tally of $32.5 billion despite some delays in the shipment of its new line of Blackwell processors owing to design changes and supply chain snarls. NVIDIA said it executed a change to the Blackwell graphics processing unit mass to improve production yield, adding that the ramp is scheduled to begin in the fourth quarter and continue into 2026. We're sampling function samples of Blackwell, Grace Blackwell, and varieties of system configuration as we speak. NVIDIA CEO Jensen Huang, if I'm saying that right, told investors on a conference call late Wednesday there are something like 100 different types of Blackwell-based systems, and we're enabling our ecosystem to start sampling those. The functionality of Blackwell as it is, and we expect to start shipping out in Q4. He added, noting that the demand for NVIDIA's legacy's Hopper chips is really strong, and the appetite for Blackwell is incredible. They go on to talk about their revenue boost, and let's see, there's, Blackwell Nothing Burger. JP Morgan Analysis, similar take, noting that the 2-month delay in Blackwell GPU shipments shouldn't impact NVIDIA overall revenue profit, given that it's offset by Hopper's strong performance. So where they lack, they are starting to gain in other notable areas. So NVIDIA's expectations from this analysis, they raised their price target by 25 to 150 per share. The group continues to deliver amidst high expectations with strong data center growth. If I can go back and find, there was a beautiful picture here that Norm put out. I wish I could find it. If I can find it quick enough, I'll bring it up for you guys. Oh, here it is. Okay, so this is a nice picture. This just shows right here, guys, their data growth. Like, look at their data center revenue. They're gaining $26.3 billion just from their data center. They used to be gaming. I used to only think of NVIDIA as gaming. If you look right here, this is their gaming section. Let me bring this over so you guys can see this a little better. So this is their gaming section right here. And you can see that their gaming is very small. $2.9 billion are only coming from gaming. And I say only, but $26.3 billion come from their data centers. Isn't that amazing? $26.3 billion from their data centers. That's where they're getting most of their revenue. It's all coming off of that, guys, their data center, right? And they're building more. It's a beautiful thing. So I like it. I like what they're doing. I do personally think it is the future, but, you know, at the same hand, how inflated is this thing going to get? Look at this on the stock heat map, guys. Just look at this on the stock heat map. Let me get me out of the way so you guys can see this. But if you look, here's Apple and NVIDIA, the two biggest things out there. Then we have Microsoft and Google. These four make up the S&P 500. These four move the US market. NVIDIA, look at this, $2.8 trillion company. Look where it came from December of 2023. $50, more than doubled. What a beautiful, beautiful thing, guys. A beautiful thing to be a part of when you took, when you actually took action and played this a little bit. If you identified this as a leader, as we did, it turned into a beautiful trade. And I'm very, very proud to say that this NVIDIA is probably my biggest winner, okay, overall this year and most of last year too. So that's that. Wow, we got a lot to read. Michael Anthony, you're typing up a storm. You look like that that meme I shared with Martinez, Jolene. It's of that actor. Oh, here I have it right here. I might as well just bring it up. This is you right now, Michael. I don't. This is you, dude. You're just typing away. I love it though. I love it, man. I love it. Keep it up. I love the chat, guys. I love the chat. I Absolutely love it. I'm glad to be here, and I'm glad that you guys are finding some entertainment on this. So yeah, I see that you're bringing up some chips and all that good stuff. The CEO wouldn't answer certain questions that someone else would ask the same questions and they would avoid. Yeah, I actually did not catch on to that. That's very interesting, Michael. Very cool. I wonder what everybody else was thinking. Didn't release the flaws in the new chip until he was finished selling, which sold under 100, like 99.91. NVIDIA went up $400 in a day, which could fall that much, would knock shares down. That's true. Yeah, Jolene, you got yourself a faster typer than you right here. You and Michael are going to have a type off, that's for sure. And I saved this one just for the end because I was asking the wife. I said, I don't think this has too much to do with the market. But, you know, I have kids. A lot of my viewers have kids and have grandchildren. So I think it's kind of cool. I think we're going to read about this. American kids are losing fundamental skills, and states should address this now before they lose billions in federal funding. So I don't know how much this has to do with the stock market, but I figured this is kind of important, and I wanted to read it to you guys. So I hope you enjoy it. Only 1 in 3 children in the United States are meeting reading standards in 4th grade. I want to pause right there and say, where my kids go to school, they have focused on reading, and it's absolutely awesome. My kids have read through a lot of the summer. They read on their summer breaks. My kids are avid readers. Maybe not so much recently, but through 1st through 6th grade, we were reading to them constantly. I think it's very important. I didn't read a lot, but I had, and shout out to you, Miss Dady. If you're ever watching this, Miss Dady, I just want to give you my love. She got me interested in reading, and I swear I would not be where I'm at today, intellectually anyway, even though it's not all there, okay? But I would be even worse if it wasn't for you, Miss Dady, so shout out to you. Keep on teaching, keep on inspiring kids to read. So anyway, let's continue on. Only 1 in 4 8th graders are proficient in math, and a past pandemic student absence has skyrocketed according to the 35th edition of the annual Signature Publications. The Kids Count data book. As a result, too few children are emerging from our high schools ready to earn because they are not arriving at a schoolhouse door ready to learn. So now I can see how that this might kind of head into the overall stock market, because if you don't have people that are ready to earn, we have less CEOs, we have less entrepreneurs, we have less people that are out there for America trying to create bigger and better things. When our educational and economic foundations are this fragile, it should be everyone's concern because the stakes are high. According to one estimate, up to $31 trillion in U.S. economic activity hinges on addressing pandemic-era backsliding alone. As of early summer, states had more than $40 billion in federal funding available to help address this crisis. Now, they have just a few weeks to tap it before it disappears. Jobs that pay well in fields that are growing quickly, from software developers to advanced machinery mechanics, will only be open to capable job seekers. Not all of these careers require advanced degrees or even a bachelor's degree, but they do require a skill that too few students in America are acquiring. So how do we get here? For decades, the Casey Foundation and many partners have sounded the alarm that America is not equipping kids to learn and succeed. There are multiple related factors that will improve this situation, such as ensuring schools use evidence-based approach to teach reading and recruit and retain great teachers, but will only work if students are, or will not work if students are not in school. Unfortunately, chronic absence with student misses 10 or days, chronic absence when a student misses 10 or more days, so that's chronic absence, during an academic year for any recession is a key contributor to the low latency and numeracy skills reflected in the data. Now that I'm reading this, I'm so worried that I'm going to like mispronunciate something. That would be absolutely hilarious. Let's see. NASCAR All Out says, do you trade small caps? We do trade small caps here. Actually, if you let me finish this, I'll be happy, NASCAR, to show you the strategy that I'm currently working on. I only got about 25 examples right now, but I can go over it really quick. So the number of chronically absent students has almost doubled from 2018 to 2019, the final full school year before the pandemic. Nationally, 30% of all students, nearly 15 million kids, were chronically absent during 2021-2022 school year when in-person learning mostly resumed. through the problem predates COVID-19. The pandemic broke down social norms, including the daily routine of families, making it more difficult to get kids to the bus stop on time. A missed bus could mean missing school when parents must go to work or might already be there. Shifting advice from doctors and school systems has made it difficult for parents to know when to keep kids at home to avoid the spread illness. I can definitely see that. I can see it in my family. I can see it in many other families. COVID really did a number on a lot of families, guys. What happened was we all were in these routines and we got out of those routines, and it sure was tough. Let's go over some of these in the chat. Dan Bob Dan again posted the link tree. Click on that link tree. Find me on all platforms. Use the TradingView to see this awesome platform. Jolene says, we are partners with the Ann E. Casey Foundation. They are a leader foundation. Hell yeah, absolutely. It seems like they are trying to do their best. And NASCAR All Out. Listen, if you are still here, yes, today actually I traded XRTX. I have a 5-minute trend strategy, and here it is. You get a big push up on volume, and it pulls back, and it has a nice consolidation. This one so happened to be above the VWAP area, making 1, 2, 3 new higher lows and 1, 2, 3 new lower highs. It gets tight and then it breaks out on volume. That is a plus. We don't need to see volume at first to take the breakout as of right now. But my strategy is that is exactly what it consists of. And if you want to be a part of that, you're more than welcome to join the Discord. You just have to have an open mind and a heart of gold. And I really mean that. We weed out the weak, I shouldn't say the weak, but we weed out the assholes. We don't allow anybody to join if they get out of hand or they start talking crap or they're rude or anything like that. We just get rid of you. We don't want anything crazy going on there. We're all really chill. We're all ready to learn, and we all are very loving, caring people. So if you want to join, you're more than welcome to join. Just fair warn you. You got to have a heart of gold. You got to have an open mind and be kind and courteous, because our Dan Bob Dan, he's got that band hammer in his hand, and he's ready to use it. Oh, man, oh, man. Let me bring up my Evernote really quick, and I can show you a quick description of my 5-minute trend break strategy. I always like to show process, guys. Process is key in all of this. Let's see here. Buy rules, all on a 5-minute time frame, 3 higher lows, 3 lower highs above VWAP. I'm still working on my sell rules because I don't have 100 examples, but here are all my examples right here. And if you join, I'm more than welcome to go over with you. I'm always here to help you guys, and it always makes me stronger. But I always like to show process, because process is key to everything. NASCAR says, I don't think you would believe me if I told you I was in XRTX at what $1.28, literally sold for pennies though. Brother, I'm with you. I'm telling you, everybody, we're all learning. And I believe you, NASCAR. I believe you. I really like to hear that. But that's why we have to have a strategy. I did not follow my strategy to a key. I was in right here when it broke out. As it came back down, my strategy tells me I need to sell at the latest lower high, which would have been right here. And I exited out because it tried to push up through here. I'm sorry, got in here. It tried to push up through here. It could not, and I did not see any volume right here. So I exited out for about $30. Right here would have been $300. So still, I'm not risking a lot. I'm only made $30 on this. I was only going to make $300 on this. I'm not making, $3-4 grand yet on small cap stocks. I save that for the large and mega caps. That I like to play that on those some mid stocks too. But we play a trend and base breakout strategy on large and mid cap stocks, some mega caps if they meet the criteria. But with small cap stocks, I'm risking very, very small right now. And the reason for it is because I want to have my strategy completely set with over 100 examples before I can say, hey, you know what? I like this. This is what I want to do. And this is how I'm going to trade it, because I want to add to my rules so that way I know exactly what I'm doing so I don't sell out for pennies as well. So NASCAR, I hope I got your vote. I hope you hit that like. I hope you hit that subscribe button. Guys, I hope that you are enjoying this show tonight. I have a blast doing this. I have to have a huge shout out to Dan Bob Dan for always bringing me these stories. I get to go spend time with my wife and child today for like 4 hours, and I just kept seeing the news articles pull in, and then I go over them, I figure out what I want to do. He's setting all this up, guys, and he does all the advertising on Facebook and on Twitter. He does all this hard work in the back scene. I got to give all the glory to Dan Bob. Thank you so much, Dan Bob. I love you, buddy. So thank you so much for helping me set up this show. It's really going on in the background, guys. So Heart of Gold, open mind, join that Discord. I hope you guys had an awesome night, and we will see you guys very, very soon. And do keep in mind, okay, I know we got 19 of you in here still, so keep in mind, I'm going to give you the outro, but if you have said anything in the chat, anything whatsoever, I go back through and I say my goodbye to each and every one of you. So I give you each a shout out. So stay till the very, very end and we will see ya. And in case my Uncle Harold is watching this at a later time, I got to say, I love you, Unc. Happy birthday to you. Happy birthday to you. Happy birthday to you. Happy birthday, Uncle Harold. I love you. Take care, guys. We will see you guys on the next one. Peace. Now that was a show, baby. I had fun. I hope you guys had fun too. Jimmy Bright, good night. Good night. We'll see you on the next one, brother. Thank you so much for being here. Michael, I appreciate all your outlooks today. I'm very happy that some of our ideas finally are lining up. I knew eventually they would, brother. It's good to see you. I'm glad you're here, brother. Jolene, sweet Jolene. Thank you so much for being here, Jolene. I hope to get you back on the show again. NASCAR, I hope we got your vote. I hope you joined the Discord, brother. I think with the small caps, we could have ourselves a merry old time working on a strategy together. Yosef, thank you, sir. Thank you for swinging in. You are very dedicated to the channel, and I do greatly appreciate you, brother. You are awesome. Beef Stewie, the man, the myth, the legend, my day one, the twinkle in my eye, Beef Stewie. Predator, hey, if you're still here, dude, you spent like 4 hours on that scanner, maybe 5 hours on that scanner, refining it for me today. For not just for me, for everybody, dude. Huge shout out to you, Predator. I wish I would have wrote that down. I should have taken like a 5-minute segment out today to say thank you. Predator, you're awesome, dude. Thank you so much for really honing in on our scanner so we can get the best stocks out to everybody on the weekends. So we will have that updated scanner out for you. Erica, watching from 2 different devices. Erica K, you're the best. Seriously, you are awesome. I really appreciate that. It does really mean a lot. Shahil, I really need to work on my Indian names, man. I'm so bad at them. Sarjil, Ili Imanili, baby. Thank you so much for being here. If you're still here and you watch till the end, thank you so much. Appreciate you. Sandra McDonald, I know that you found my other account. Now you're watching me do jujitsu. Sandra McDaniel, thank you so much. I'm glad that you showed up. I'm glad that you're here. And I think it's hilarious. I was a little embarrassed to see that you found my other channel and that you subscribed to it, but I do appreciate you. That's the goofy side of me. I'm just doing random stuff over there. So I hope you enjoyed it. Johnny Rodriguez was here. He said, hello. Johnny, I know you probably don't speak like that, but that's just how I picture it. Hope you have a good night, brother. Thank you so much. And Granny Ranny, the love of my life, my grandma. Thank you so much for joining, Grandma. I appreciate you always supporting me. Norman Conklin, always here supporting. We're going to end the poll today. The poll was, do you think America is in trouble? Do you think we are headed towards a recession? 40% of you said, yes, we are in trouble. 30% said, I don't know, which is completely fine. 25% think that, no, a soft landing is imminent. You know, I really want to lean toward a soft landing, especially because we're still above a 21-day moving average. I think a soft landing is imminent, but 40% of you think we are in trouble. We will see very, very soon if we are. Hope you guys have an awesome night. I hope you guys have a great weekend. We will see you on Friday in the Discord, baby. Hope you guys have a good one. Nothing but love, baby. Nothing but love. Take care, guys.